Have you ever felt like the market knows your trade before you even place it? You enter long, price drops. You short, price reverses instantly. It's almost as if someone's watching your orders. Well, they are. Welcome to the shadow order strategy, a mysterious concept that exposes how big players hide their true intentions inside the market structure. This isn't about indicators or oscillators. This is about decoding invisible orders. And once you learn to spot them, you'll realize every candle is a clue. Stay tuned till the end. I'll show you exactly how to see what the naked eye can't.
Let's start from the shadows. When institutions trade, they can't simply hit buy or sell like retail traders. Their orders are massive, millions, sometimes billions. If they dumped all that into the market at once, the price would explode and expose their plan. So instead, they use shadow orders, hidden or layered positions spread across multiple price levels using algorithms. These orders are placed in fragments, quietly filling during consolidation or retracements while retail traders think the market is ranging. In reality, the smart money is building positions in silence.
Here's where the illusion begins. Retail traders are taught that sideways markets are indecision zones, but for institutions, consolidation is a harvesting phase. They're not indecisive, they're loading up. When price suddenly breaks out, it's not random, it's the release of built-up shadow orders. So the next time you see tight ranges or slow-moving candles, don't get bored. That's where the giants are making their moves.
Let's simplify this with a story. Imagine you're a hedge fund wanting to buy 100 million units of a currency pair. If you buy all at once, the market spikes. Your average price gets worse. So, your algorithm places smaller buy orders at every dip, building a position without leaving a footprint. That's a shadow accumulation. Once you're fully loaded, you push price higher aggressively, and retail traders jump in late thinking it's a breakout. Guess who's selling to them at the top? You, the institution.
Here's the part that feels like magic once you master it. Shadow orders leave footprints. Not visible directly, but through how candles behave. Repeated wicks in the same zone. When price constantly rejects a level, but doesn't break it, institutions are absorbing liquidity there. Compression moves. Slow grind toward a key level with smaller candles. It's not momentum, it's a liquidity buildup before an explosive move. Volume divergence. If price is rising, but volume isn't, shadow distribution might be happening. Unfilled imbalances or fair value gaps. These often form after shadow orders are triggered. Price tends to revisit these areas later. When you combine these clues, you're essentially watching the ghost of institutional intent.
To trade this strategy effectively, you must recognize these three repeating phases. Phase 1, accumulation, the silence. Price moves in a tight range. Volume stays low. Repeated wicks show absorption. Phase 2, manipulation, the fake move. A breakout occurs, usually a liquidity grab, fooling retail traders. Phase 3, expansion, the true directional push, begins after the fake move is done, often with large impulsive candles and volume confirmation. These three phases happen over and over again across all markets and timeframes.
Let's translate this into a tradable framework. Step 1, identify accumulation zones, tight ranges, repeated rejections. Step 2, wait for manipulation, a false breakout, or liquidity sweep. Step 3, enter on confirmation of the real expansion move. Step 4, stop loss goes beyond the fake breakout zone. Step 5, target next major liquidity pool, or order block. Example, price consolidates between 1.2000 and 1.2020, breaks out to 1.2030, fake move, then reverses strongly. You short after the reversal with stop above 1.2040. Your target? 1.1950, the next liquidity pocket. That's shadow order trading in action. Sometimes fake breakouts can trap even smart traders, so use these filters to confirm. Volume spike after sweep indicates real participation. Break of market structure, price forms a lower low or higher high, confirming direction. And fair value gap fill, price retests imbalance before continuing, sign of institutional follow-through. Combine these confirmations and you'll spot genuine expansion phases 70 to 80% more accurately.
Even experienced traders misinterpret shadow orders. Avoid trading the range without waiting for manipulation. Avoid assuming every consolidation is accumulation. Avoid ignoring time confluence. Shadow moves align with session openings. And using tight stops near obvious levels, you'll be the liquidity. Patience is key. Remember, institutions need time to fill massive orders. Don't rush. Wait for their footprints to appear.
Here's where the mystery turns into mastery. Combine shadow order zones with SMC elements like liquidity sweeps, order blocks, and imbalances. When shadow accumulation aligns with an order block plus liquidity sweep, that's a golden setup. You're effectively trading in sync with institutional footprints, not against them. Imagine a market forming equal highs near 1.3100. Below that, price ranges tightly with repeated rejections. At London Open, it spikes up, taking out highs, then collapses. Retail traders lose, institutions profit. That range was the shadow accumulation, the spike was manipulation, and the dump was expansion. Spotting this early transforms your trading forever.
Because it's invisible. There are no indicators flashing buy or sell. Only subtle price behaviors like whispers from the chart. Most traders miss it because they focus on visible data. But the real edge lies in what's not shown, the hidden intentions behind every candle. That's why it's called the shadow order strategy. Let's summarize the mystery into actionable wisdom. Institutions hide massive orders using accumulation and compression. Price always manipulates before expansion. Shadow orders leave clues, repeated wicks, imbalances, fake breaks. Trade after manipulation, not during it. Combine with liquidity and structure for sniper-level precision. Once you start seeing these shadows, you're no longer the hunted, you become the hunter. If this strategy made you rethink how price really moves, comment below. I trade in the shadows. Hit that like, subscribe, and bell icon so you don't miss the next episode, where we'll decode how hidden orders create fair value gaps before major reversals. Until then, remember, the market never hides. It whispers. You just need to know how to listen.